Great, good morning. Looking forward to the day. Big couple of days ahead, of course. We've got big ECB press conference, 1:30, and then, of course, payrolls tomorrow. So really the business end of the week and really the business end of the year. If you're thinking about macro data for 2014, really this is the final big set of figures that people are going to be looking out for and shaping their opinions on where markets are going to end up come the 31st of December. So let's just have a quick look at what's going on here. And I'm just looking at currencies. I mean, well, just as a quick reminder, I guess, first of all, let's look at what happened yesterday in terms of ADPs. So this was the US ADP reading. You've got the bar on the right-hand side, 208,000 jobs created in the month of November for the private sector, which was lower than expected. It did edge up slightly and revised up marginally the October figure to 233. So, net this is fine. It's worse than expected, but at least it's over 200, and so, that's the kind of minimum requirement which this data achieved. And so, it still means people are not concerned about Friday's payrolls figure. I don't think this data yesterday means anybody's over optimistic or over bullish about tomorrow's data, but it's reassuring. This figure was over 200,000, and you could argue it's in the sweet spot from an equity market point of view, because it means we've got good, solid, decent job growth without it being too good, and therefore forcing the Fed to raise rates sooner. So given the sweet spot was found, look what happened into the close last night for the S&P. And we had a strong cash open yesterday, driving up and breaking the high point from the day before. Nice support then found on that key level, 2068, after the break on the cash open. Really good support, and then a launch into the close, and actually a new all-time ever high, 2076 for the E-mini S&P 500, an all-time high. We're consolidating this move now, but we are back at the top. If we look on the daily chart, this is what it looks like. We actually didn't get a record close, because where we closed was at 2072, which was lower than the close we got on the 27th of November. So it does mean that we are still one record closing high off matching the record for this index in terms of setting a certain number of closing highs in one calendar year. So I'm sure it's going to happen, but almost happened yesterday, but not quite. So this is the situation from the data point of view. I just want to show you, let's have a look at currencies, because we've got a couple of interesting things, actually a few interesting things. Let's check out these currencies. I'm going to pull in some charts here. We're going to have euro, dollar and cable on the bottom, and then I'm going to just try and stick dollar yen here at the top. And look at this. Look at these markets. It's quite remarkable. All three of them are trending phenomenally accurately. Well, I've got a daily chart on the bottom two, and I've only got a 1 hour chart just on the dollar yen here, because we've had such a steep move in recent times over the last couple of weeks. But look at these trends, particularly on euro, dollar and cable. It's almost like a carbon copy here, and these trend lines, and particularly on the euro dollar, this downward trend line on the daily chart is exceptionally strong. Look how well we've tested this throughout the last sort of 3 weeks, every single time. It's been so accurate, this trend line. And again, on Tuesday we tested it, on Monday we tested it, Friday last week, Thursday last week, Wednesday last week, every single day we tested this trend line, and it's just been an absolute rock solid resistance. So yesterday was notable then for the euro dollar, because we tracked down below the November low on the continuation chart. This is at 123.43. We got weak data from the eurozone on services. If we just take this to a shorter time frame, 1 hour chart. So the move came really off the 815 Spanish services PMI that was quite a bit lower than expected, and this put the euro on the back foot, and it never really recovered. And we got some strength for the dollar through the US session into the European close, and so we have a new 2.5-year low, testing the 123 handle. Just as I speak, though, the euro-dollar is just edging up through the overnight high, so we are making new intraday highs here for the eurozone, for the euro-dollar. But we very much remain on the back foot. And of course, moving into Draghi's key press conference at 1:30. Just before we talk about Draghi, though, check out cable here. So very similarly, and in fact, if anything, it's an even steeper downward trend line on cable than it is on the euro-dollar. So we've had a consolidation phase for this currency over the last sort of 2-3 weeks, and we are edging towards the trend line again. Today, for example, that trend line resistance actually coincides with the high of the week set on Monday. So if we did get up there, that would be certainly a very interesting resistance point to have a look at. But sterling's been on the back foot, of course, throughout this period, and mostly because of the fact we've got no wage growth in the UK, and if anything, wages are going in the opposite direction. Not only is there not growth, you could argue it's been contracting, so the wage situation is such that our inflation expectations have radically changed in recent months, and it means that we don't think the Bank of England are going to raise rates until the end of next year. But in the meantime, over the last month or two, we're now back in that camp of expecting a Fed hike. In the summer, there's some analysts now even saying, by the end of Q1, you're going to get the Fed hiking rates. Of course, it will completely depend on wage growth and inflation, and we'll see how that comes through. But certainly the data in the US has remained strong. It's just whether or not the US, this is the anomaly with the UK's growth story over the last 18 months, really strong growth. Literally the strongest growth amongst major developed economies, and yet there's been a complete absence of wage growth. And George Osborne's budget statement yesterday, highlighted the fact that, because the deficit reduction, the fiscal adjustment, the fiscal austerity plan has not hit targets, it's because the growth was expected to have led to greater tax receipts for the UK government, but it just hasn't happened because income tax hasn't risen, because wages haven't grown. And so it's a weird anomaly that's happening in the UK, and the longer that continues, the longer it will be until the Bank of England hikes rates. And this is why sterling's under pressure against the dollar over the last few months. And wage growth figures are absolutely the key data points for these currencies at the moment. When you're looking at the dollar and the pound, wage growth is ultimately going to shape trend. So let's just switch attention then to this afternoon. Actually, before we look at that, let me just bring in the data calendar. So this is the calendar for today, and not really much going on this morning. I know you've got some what look to be important figures here, retail PMI figures for Europe, France, Germany, Italy, but actually this is quite a new data set, and it's still too new to really carry any gravitas. And so we had the retail sales figures as a whole from the Eurozone yesterday anyway, and so these aren't actually particularly important. So really it is just all about monetary policy today. In terms of data this afternoon, we do have jobless claims from the US, and that will be of interest because last week's data was particularly weak compared to recent times. It pushed back up above 300,000, so we want to see a little bit of a recovery there. But it's all about the ECB's press conference. So firstly, though, at midday we've got the Bank of England announcing any changes to interest rates. There is 100% chance that they will say no change. Okay, there's absolutely literally zero likelihood of any other announcement. So that midday announcement is completely irrelevant. All right, you can basically ignore it. So we move to the 12:45 event. This is where the ECB announce whether they're going to change interest rates, and that ain't happening either, because they've cut rates to 0.05%. They've told us multiple times in the last month or two that this is the lower bound. They're not going any lower. they've exhausted the interest rate ammunition. So the 12.45